Good morning, dignitaries on the dais, Mr. Amitabh Chaudhary, Sri Siddharth Mohanty, Mr. Rao, Mr. Mishra, and Pankaj Ji, Joint Secretary, Government of India, and of course, Secretary Mr. Nagraju Madliar. I think he would not be able to join physically, but he has his speech and message that will be conveyed. So I thank Association of NPS Intermediaries for inviting us and my colleagues and all of you here. So this is a remarkable day. All the stakeholders in the NPS, coming together. Almost everybody is a stakeholder in NPS because, your POP, then there are banks. And if it's a pension, that means it is understood as annuity. So insurance companies come in, of course, your pension funds, and which are again sponsored by banks and AMCs. So in a way, everybody is involved in this whole process. NPS has made a very steady progress, remarkable journey. So as we speak, that almost 1.6 crore people are connected with NPS, and of course we add on to that APY, which is again for a low-income, underprivileged people. So the number is quite huge. It's over 8 crore active accounts which are there and growing very, very rapidly. And the assets under management almost touching 14 lakh crore. That is also contributing to the national progress in terms of long-term investment. But despite all that, there are a lot of ground to be covered, a lot of people to be covered. And the challenge arises more out of the nature of our labor market. Not everybody fortunate like us that we have at least some social security, which is employer-employee relationship. And so may it be employees provident fund or NPS or individual, company superannuation funds. But you see more than 80% workforce is in the informal sector. So there is no access. Access may be there, but there is no statutory requirement that they get something. So there's a huge gap. And if you look globally, that you would see that, for example, in OECD countries, pension assets are over 80% of their GDP. But here, if you add on everything, EPFO being the leading one, insurance sector, they give annuity, NPS and all that put together. So that would be like 16 to 17% of GDP. Within that, NPS could be around 4% of GDP. So that's a very small number. And as a country that we are aspiring to be a high income country by the middle of the century, the 2 decades or odd years. So then what's going to happen? So the young population which is driving this economic development obviously will grow. But have we made that kind of provision for old age income security? Certainly not. So there, so there is a huge challenge and ground that we really would have to cover. In that context, that if you see that NPS has emerged as a very flexible and user-friendly pension scheme and easily accessible, because the threshold again on 1,000 rupees, one can really open an NPS account, and it is accessible to now people starting from A0 to 70. We recently, the government launched the NPS Vatshalya when we are deliberating on this scheme. So people were saying, means you must be kidding, ridiculous that yes, youngsters are not connected with pension. They don't look at pension. Now, saying the children, newborn babies will do pension. But I used to tell them that, we love our children more than ourselves. So, definitely parents may not have an NPS for themselves, but they will get it for their children. And the number, it's making good progress. It's been few months, we got about 75,000 people onboarded into NPS Varshalya. And there is a nudge from the government also. If you see the last budget, that as per the new tax regime, that what we see, that it's neutral to all savings media wherever you put your money. But if the employer puts money for the employee in the NPS, 14% is tax deductible as business expenditure. And same under 80CCD2, that you would see that for the employees also, 14% is tax deductible. So clearly, NPS stands out as a tax efficient, social security product. And globally, since intermediaries are here, they may complain, but I could say that this is the lowest cost pension scheme in the world. So we are part of the International Organization of Pension Supervisors. They don't show in their chart, NPS. They will put a footnote, say that because India is an outlier in terms of cost. Because other jurisdiction, we see the cost are huge. So why cost is low? Essentially it's because of our digital process that which is there, and linking of banking and with the Aadhaar, and particularly for the low income PMJDY accounts are there, everybody has a bank. So once you have a digital identity, that's a gateway to the formal financial system. So leveraging on that, see, for NPS, anybody can just do seamlessly digitally can come in through the intermediaries. So that also reduces cost. And many more technological progress that we have made, particularly in the payment space. Because earlier NPS used to be T+2, 3, 4, whenever the money comes, it comes. So that one takes a huge market risk in that process, because as you know, NPS is market determined, and net asset value is determined at the end of the day. And actually, in case of NPS, there are no hidden things there, and it is what you see, you get. So that is how it is. And now we have brought in T+0. If somebody puts money by 11 o'clock, so that means they get same day NAB, and the effort is to make it by noon. Somebody puts money, and we get that kind of NAB on that basis. So this progress is being made. And in terms of instrument, also a lot of changes have been made, because the systematic lump sum withdrawal, which has been that people can really stay in the pension ecosystem for longer and draw their pension, and can defer annuity up to 75. And since Mr. Mohanty is there also, I could say that normally people look at the annuity numbers and say that is 6, 5.5 and 6 and things like that. So why should we join NPS? But then there is an option. There is an option that one first uses the 60% of the lump sum. So all this facility that we have brought in, we also brought in the life cycle fund, the balanced life cycle fund, which is again equity and debt, 50-50, and tapering on that really starts at age 45. Because unlike the earlier life cycle funds, which was at age 35, because if you see somebody joins workforce 25, 30, so you split one's working years into two halves, so then in the middle, so the tapering really starts, and then it stabilizes towards 55, so that you don't take the end point risk of adverse market movement. So a whole lot of things have been done in this process. So though NPS is making progress, but it is not the way that one would really desire. So in that context, the association could play a very important role, because the main problem is awareness. And to admit to you that I spent all my life in the financial sector. Before I came to PFRDA, I had no idea about NPS and pension, what really happens, because there are a lot of benefits. Awareness is not there. Even bankers, many of them, the awareness is not. If they tell them, oh, it's like that, because the earlier narrative was, oh, 50,000 you get 80CCD 1B additional deduction under the old tax system. Everybody used to put that we do the tax saving. So that knowledge is not there. So creation of awareness. So as pension intermediaries, that when we are competing among oneself, among each other, but collectively there is a message. Collectively that we can pass on that message, and so that will help in the progress of NPS. And association also, before formulation, there are of course a lot of apprehension, a lot of thinking on the whole process, that whether they will come with a red flag with so many demands and all that. So why do you get into all this process? But that doesn't happen. When you come collectively as a group, one behaves more responsibly in that whole process. And this is what we have seen before us, the history in the any financial sector, any segment you see, there are association, starting from IBA, FEDI, the earlier ones, even Insurance Council, both life and non-life, they have come together. So it is a wrong presumption that the regulator has all the wisdom, because we learn from the market participants. When you sit together, experts like you, professionals, sit together and bring some suggestions on the table. So that has a greater traction in that whole process. And so this sector will go a long way to improve awareness among people, and also with a proactive interaction with the regulator. So as we work towards the dream of Viksit Bharat 2047, we envision an India where every individual enjoys financial dignity during their retirement years. A pension society is the hallmark of a developed economy, a nation where elders are financially independent and are free from uncertainties. The NPS, with its low cost, flexibility, and digital-first approach, is the most potent instrument for achieving this vision. However, this will require strong push on policy, awareness, and stakeholder collaboration. With ANI leading the charge, backed by dedication of its members and guidance from the regulator, I have no doubt we'll overcome challenges, pioneer innovations, and turn India into a global benchmark for the pension inclusivity and financial security. Let us move forward together with a firm belief that every contribution counts towards building a prosperous and financially empowered India. Thank you, and I wish the Association of NPS Intermediaries great success in its journey. Thank you.